Hi everyone, my name is Emily. Welcome back to the SGK Wealth Compass, where financial insights are clearly explained. Today it is currently Friday, February 27th, and in this episode we are going to have John Steigerwald and Eric Randolph tell you what was going on in the financial market this week. Thank you so much, and we hope you enjoy.
Good morning, everyone. My name is John Steigerwald. I'm CEO of SGK Wealth Advisors.
And I'm Eric Randolph, CFP and Portfolio Manager.
Welcome to our podcast, and let's jump right into it. Big topic of conversation these days is artificial intelligence.
AI.
Investors and the general public, you hear about it every day. We had our Bloomberg rep in this week, Grace, fantastic, really smart young lady, apparently an amazing lacrosse player at the University of Rochester as well. Bloomberg, we use 4 terminals here at SGK. It is by far and away the best research tool on the planet for global equities and global fixed income or bonds, if you will. So we actually at SGK, we're very innovative. So we're beta testing their AI tool within the Bloomberg terminal. It's called Ask B, not very original, but I get it. So Eric, why don't you talk a little bit about that?
So imagine, if you will, applying large language technology, large language model technology to Bloomberg's wealth of tokenized data. Again, what more can you ask for, right? On the fly charting, on the fly comparisons, being able to do deep dive studies into the companies in your portfolio, ultimately giving us enhanced abilities to track, interpret, and analyze market data. Again, really incredible tool.
And at SGK, we have a weekly investment meeting every Monday morning, and we're looking at some exciting new opportunities for our clients and their portfolios this year in terms of new stock acquisitions. So I noticed Jeff this week used the AI tool to generate some research information for us to read over ahead of that meeting. So I'm excited about that opportunity.
So that said, since we're on the subject of AI, and is again top of mind, let's talk a little bit about how AI is actually impacting the names in our clients' portfolios.
Certainly. So last year, there's companies that have direct ties to AI that are obvious, like Microsoft with ChatGPT and the relationship with OpenAI. Stock we added early last year, Alphabet, had an incredible year. Part of it was their Gemini tool, their AI tool, received a lot of accolades last year in terms of how effective it is. So when you pull up Safari and do a search on your iPhone or Google Chrome on your computer, Gemini is one of the first things that comes up with answers if you're using that tool, and it's a fantastic tool. But there's other more subtle ways that AI is positively impacting the names in our portfolio. We've had a pullback in companies like Microsoft this year, but we're seeing a benefit in other areas. NextEra, largest utility company in the United States. They're big in renewables, but they also own traditional utility companies like Florida Power and Light. So every earnings conference call, they talk about the demand for power. For what, Eric?
For data centers.
Data centers, amen. So NextEra's stock is up 14% this year for us, had a good year last year, pays a 2.7% dividend. Another name I like to highlight is Kinder Morgan. They are the largest pipeline company in the United States. They push a lot of natural gas through those pipelines. Where does a good percentage of that go, Eric?
I guess the data centers.
The data centers. Again, a stock had a good year for us last year. It's up over 20% this year, pays a 3.6% dividend. They raise it consistently, and that's over 3 times the broader market. Another one that kind of flies under the radar is a company called ABB. Now, sometimes we get asked international exposure in the portfolio. 90+% of the companies we own are global companies. ABB is an example of that, but they're actually a foreign company. They're a Swiss-based engineering firm. They make componentry for utility companies globally.
I think I see a trend here.
Yeah, they have a big business here in the US, for example.
Yeah.
You know, renewables, I'll give you an example. You have to have something to connect wind turbines to the power grid. In the UK, it's very windy off the coast of the UK if you've ever been. That's a big source of power. So ABB, for example, makes componentry to connect the turbine to the power grid. Very, very important. Stellar stock for us last year. It's up 25% this year and pays a 1.3% dividend.
I'll take it.
Yeah, absolutely. So to get to the weekly email, we had some important economic data this week. Eric, why don't you touch on that?
We did actually have some really useful tidbits of information. Number one, consumer confidence actually improved in the month of February. The Conference Board gauge actually went to 91.2 from 89. Why? This is off of labor market data actually stabilizing somewhat. What form did this take? So there are a couple of different surveys, one of which is, do you feel that jobs are more plentiful, or do you feel that jobs actually are fewer? And actually, oddly enough, both went up However, those that said that the jobs actually were more plentiful went up by more than those who said that there were fewer jobs. So that's actually a positive
That's a
sign.
good sign. Yeah, glad to hear that.
So you add that to also inflation has also been relatively tame compared to previous quarter, and that's kind of what drove up the consumer confidence numbers. Also, beyond that, mortgage rates actually fell the lowest they've been since 2022. The 30-year mortgage actually clocked in at about 6.09%. So again, to provide some context, we're coming in for resale market actually a very strong finish to 2025. So now lower interest rates, and we're going into the spring selling season. So again, potentially this could portend really positive outcomes as we go forward. And then last but not least, we had unemployment numbers. Claims actually remained relatively low. The next thing, of course, on our docket to watch out for are the February employment numbers. That'll be out next Friday, March the 6th. That's not a fact.
One last item on the economic front. We had the producer price index data come out this morning, and unfortunately it was a little hotter than expected. So that's a negative. So you're seeing a pullback in the stock market today, but we have balanced portfolios at SGK. So while stocks are pulling back, bonds are actually rising. In other words, it's a little bit of a flight into the treasury market, and that caused the yield on the 10-year treasury to drop below 4%. We haven't seen that in a while. So it's sitting at 3.97% at the time of this filming. That bodes well for future interest rates because the 30-year mortgage is tied to the 10-year treasury. And this is ahead of the spring selling season, so we want to see the mortgage rates continue to trend lower. It's an important part of the U.S. economy, refinancing or home sales.
So since you actually bring up rates and talking about interest rates and how that impacts the market, I know that we had Fed Governor Waller and also Fed President Goolsbee made some comments this week. So what'd you get from that?
Yeah, so these Fed officials, they love to hear themselves talk. So I don't want to spend too much time on it, but it was interesting because Waller dissented at the last meeting. He was one of two people to dissent. He was in favor of a 25 basis point, a quarter point interest rate cut in the federal funds rate. So he cited weakness in the labor market. So he made a comment. He was pleased to see the January employment numbers. We had better than expected job growth. The unemployment rate stabilized. However, he did make the point that with all the revisions going on in the labor market data, which I completely agree with, you just don't know at the end of the day if that's going to be revised down. Very likely. That's been the trend lately. There's a lot of seasonality that comes into play in the January numbers as well. So he made some good points. So he's on the fence. The next meeting's March, I believe. And so he's on the fence about, whether to cut rates or keep them where they are. Goolsbee made an interesting comment. He tends to be hawkish. And his comment was with the Supreme Court ruling on deeming Trump's tariffs illegal, that could cause inflation to cool. So I thought that was just an interesting point that he made. So we had some getting to the company information. I always love to talk about companies, as you can tell. So Eric, we had a couple companies in the news. What stood out for you this week?
So this week, for those of you who like to actually geek out on defense technology like I do, so one of the names in your portfolio is RTX. RTX was actually awarded a contract from DARPA, same people who brought you what? The internet.
It was not Al Gore, for the record.
If you believe that one, right? So they actually are producing a new technology. This is a long distance X-ray tool, which actually will allow them to see past and through structures, to be able to see certain buildings, to see certain machinery, structures, etc.
That's pretty cool.
And what this really allows them to do is to actually add to the data that they have right beyond blurry images, incomplete data, and also low quality images. And they actually have an algorithm that actually helps to, again, fortify their information, be able to provide data, which is really useful for our armed services persons out there on the field. So again, really important for them. Also, in your portfolio, there is a new stock that you might have noticed. It was actually a spinoff from DuPont, as a matter of fact. Ticker symbol is Q. The company's name is Qnity. What do? They produce chemicals and materials used in the manufacture and production of semiconductors. Same semiconductors you have in your smartphone, in your computer, in the data centers we were talking about earlier, exactly in the podcast today. So very important. They came out with better than expected quarterly earnings. It was really great. They also have a multi-year transformational plan. So it begins with $500 million worth of stock buybacks and also a new focus on, of course, improving efficiency and cutting costs. So again, sets them up for a very positive 2026 outlook. So,
nice.
But that's what I saw. What did you see among the companies?
By the way, Qnity's been a great stock since spinoff for our clients. We really like the prospect going forward. Accenture stood out for me this week. It's been a tough stock last year and so far this year. But we really like the valuation and the price point right now. We originally bought it back in March of 2009, right after the financial crisis at about $26 a share. So over the years, it's been a great stock for us. But they announced a strategic partnership with a company called Mistral AI. And really interesting company. It's actually founded in 2023, so a relatively young company, but they're super prominent in Europe. Not a household name here in North America, but definitely very prominent in Europe. And the founders were actually developers from Meta and also a division of Alphabet called Google DeepMind.
That I'm familiar with.
The real thinkers at these companies. So they provide enterprise solutions in terms of artificial intelligence. So it's one thing to have the software, but it's another thing to incorporate it into your enterprise practices.
Absolutely.
So for big companies, Accenture is ideally positioned as a consulting firm to pursue that implementation for mutual clients. The other announcement they made is they announced the acquisition of a company called Verum Partners, which is a small company, but that company is into infrastructure development, capital project management. They incorporate AI as well in their modeling. And it makes sense. It's going to become part of Accenture's infrastructure and capital projects group. So we like that acquisition. Seems like a really good strategic fit.
Okay. Folks, I think that about wraps it up for what we have for you for this week. Thank you very much for spending your time with us today. We hope you have a wonderful weekend. And as we say here at SGK, cheers.